Hi guys, and welcome back to Future Funded. Today I'm going to be going through something slightly different. We're going to be focusing on the FX chart and we're going to be pinpointing areas of liquidity. Now, I love Future Funded for various reasons, but one of the main reasons is their spreads for both futures and FX, especially with my strategy because I need to use tight stop losses. So let's get into it. Right, guys, so let's just get straight into this. So if we focus on the 5-minute time frame to begin with, because I really want to pinpoint liquidity here, we don't necessarily need to go on higher time frame structure at the moment. We really just want to focus on what's happening right now. So first and foremost, we want to focus on the area where there's a point of interest. Where is there a level where price could potentially react from? Well, there's a 5-minute point of interest right here, which creates an area of imbalance. Okay, so the first thing that I'm looking for is how is price moving up to this area? Okay, are we moving up slowly? Are we pumping up? What's kind of the situation? Well, we are moving up slowly. You can see for yourself, the candles are relatively small. You can see it's more or less retail flow rather than anything. And then it kind of picks up as it pumps into the area. And it's around about 6:55. So that's pre-London open. Okay, so the first thing that I can see is this trend line right here. Now, most people would look at trend lines and actually take trades off of them. My strategy is completely different. I look at trend lines and look to take them out. All right. I look at trend lines as where retail traders are putting their entries, their buy orders, and it's a good place to get manipulated. So that's what I want to be looking for. I want to be looking to take these trend lines out. So that's the first thing I see. I see trend line liquidity being built up right here. Now, if we go into the 1-minute time frame, first and foremost, I see a break of structure. All right, I see a 1-minute break of structure right here. Okay, so we got that 1-minute break of structure. Now, all I'm looking for after this point is where is the liquidity? Well, there's equal highs right there for a start. There is equal or relative equal highs right here. Do you see how there's just a build-up of liquidity everywhere here? We have some more trend line liquidity right here, which does get taken out in fairness by this. But even though we've got liquidity here, here, and here, we also need to have some form of understanding of where there's liquidity that we can target. So there's liquidity here. There's even more equal lows right here. And you could even say there is even more relative equal lows right here. Okay. So we've got at least 1, 2, 3, 4 areas that we can target. Now, if you have a look at this, we've got 2 relative equal lows. It's not directly equal, but it's still liquidity just below here, right by this trend line. And I'll come on to that in just a second. But let's first just focus all of our attention on why we are not looking to sell within these areas. Now, what some people might do is some people might look at this as a point of interest, which is absolutely fine to do that. Let me just zoom in. It is okay to do that. All right, that's not an issue to look at this area and say, right, there is a point of interest here, which creates this pump down and breaks this structure. However, you have to understand that this particular area isn't the origin of the overall move. What I mean by that is this didn't start the move to the downside. This did up here. This 1-minute point of interest up here within this 5-minute point is the very thing that actually enacted the entirety of this move. So now what most people are going to be looking for, most people are going to be looking to take sells from here. Okay. Reason being is because this is the closest place where they can get in. And they've looked at this and said, right, got a break of structure. Price has now retraced. We're at a point of interest right here. So we're going to look to take some sales right here. And we're going to put our stops just above here. You have to understand when you are entering in at a level that hasn't started the overall move, that is where most people are looking to enter. So you then, yes, become the liquidity. And as you can see, you weren't the only one who was looking to enter in and around here. Look at just how much relative equal highs and equal lows gets built up at this point of interest. Okay, it happens over, I mean, pretty much 40 to 45 minutes worth of trading. It's just buyers and sellers, but mainly retail buyers and retail sellers, and institutions kind of just building liquidity and not allowing price to go above or below. So it's trapping a bunch of buyers and sellers into the market. And then finally, what happens is you get something like this. So you get sellers obviously selling here and wanting to go to the downside. And then you get buyers, of course, wanting to buy here, right? Because technically, still speaking, on higher time frames, you could say, yeah, the trend is moving up. So you get a load of buyers coming into the market because we're still going in an uptrend on the 15-minute and the hourly time frame. All right. So that's why we're getting buyers step into the market. Now, do you see, and I'll go over it in just a second, but do you see how both sides now get stopped out of the market? So everyone who's bought here has pumped price up to here. Yes, price has gone up, but then they've just been stopped out. Okay. And now everyone who's sold here, price has gone down to, let's say, somewhere around there, maybe 1 or 2%. But most people will probably be looking for a new low to get created somewhere down here. So price has gone down to this area before most sellers have now also been stopped out of the market. Okay, so this is one of the best points in time to just sit back, sit on your hands and do nothing and just wait. Okay, we have the origin of our move, which is this 5-minute point of interest, this big box here. And within that, we have a 1-minute point of interest. We know at some point, considering how much retail liquidity is getting built up through this equal high, this trendline liquidity, this equal high, this equal low, this equal low, we know that at some point an institution is going to step into the market and they're either going to take out all of the lows and start pumping down, or they're going to start pumping up. And that's exactly what they did. They immediately pumped up, took out all of these retail sellers, did one last sweep here. So a lot of people would have still got in here at this 5-minute point, which again is still not a bad entry, but institutions would have probably done one last sweep to grab that last bit of liquidity and tap into this 1-minute POI, where you can see for yourself the move initially really did happen. All right, yes, you could say it happened from this 5-minute point, but if you want to be even more specific, this is where it really started, this 1-minute point right here. And you can see point of interest, huge imbalance, slight retracement, huge imbalance to the downside. Okay, so institutions now are pumping price back up to this area. So not only grab as much liquidity as possible to match their order, but to also close at break even on their initial order. All right. And as you can see, that kind of reaction dumped price. And that is exactly where we get in. Okay, because now what we have done, we have waited for all retail sellers to get taken out of the market. We still have retail buyers who are in the market and are, think that their trade's going well, and that's no problem. But the reality is we are now, remember what I said at the start, targeting trend line. We want this trend line to get taken out. Okay, and in doing so, we are looking to take out this liquidity here, this here, this here, this here. All of this we're using as our targets. Okay, and not only do we take all of that out, but do you see how price starts to slow down? I'll draw it right here. Price starts to slow down. All right, so retail traders are starting to come into the market, retail buyers, because they see that this trend line is getting built up. They see that they're at a third test on the trend line. So now we're starting to get some retail rejection before, and I'll get rid of all of this for a second, before we just simply get manipulation. We get an institution pumping price up, attracting as many retail buyers as possible. Bang. Price falls through the floor. Okay. So once you really start to understand this, once you really start to implement this, you really start to look at the retail methodology in a completely different light. You start to focus on, right, where is their retail traders? Retail traders are normally at equal lows and equal highs and trend line liquidity, or trend lines. Okay, that is the retail methodology. When you first get taught trading, what's the first thing you get taught? Trend lines, support and resistance, right? That's kind of the first and the basic thing that you get taught whether that be in any groups or whether that be through a mentor. That is mainly the basic fundamentals of trading. And look, I'm not going to sit here and tell you that support and resistance doesn't work. I'm not here to tell you that. All right, I have a mentor who was one of my first mentors, who's an absolute wizard at support and resistance. I can categorically tell you support and resistance works. We could go through a chart right now and we could actually get up examples showcasing it. So I'm not here to tell you that it doesn't work. I'm just here to show you a different type of strategy that actually goes against retail methodology. All right, which is this: equal lows, support and resistance, trendline liquidity. And we are looking to do the opposite. We are looking to take out all of these relative equal lows and highs, all this trendline liquidity, and then we are looking to get in at areas or points of interest where institutions have left their orders standing and they need to close out some of their orders. And that's exactly what we did right here. And that's where you can really catch the biggest moves. Okay, yes, okay, I went to here to take out this trend line, but look just how far this kept going down. Okay, we pretty much took out absolutely everything. In fact, we did take out everything. So even though there's more trendline liquidity right there, that got taken out. We took out the lows, everything got taken out, and it didn't stop going for what, a 1 to, what's that, a 1 to 20? Okay, so you can see for yourself these areas, and when you are looking at price action in this kind of manner, this is when you can really catch some of the biggest moves. So guys, that's a little bit on liquidity and how you can avoid being market manipulated by institutions. I hope that gives you some value. Here at FutureFunded, we're not just looking for prop firm traders, we're also looking to provide education where possible. And if we can give you some elements or some tips and hints as to how you can get stopped out less due to institutions, the more the better. So make sure to click the link or go to their website, get your challenge, and we'll see you inside. And guys, of course, don't forget to subscribe for more content and make sure to leave some comments for what you would like me to discuss next.